In this video, guys, we're going to look at, can you ever read too much into price? Stay tuned. Hey traders, warm welcome to you. All right, so can you ever read too much into price? Great question. And you know what? I'm giving you the answer coming from a perspective of I love price action. It's my thing. I like to be able to see what's going on. It's how I make my decisions. I trust in it. I believe in it as strategy. It's served me very well, and I know it will continue to serve me very well for a long time to come, with some tweaks and adjustments as always. Right, so the question is, can you ever read too much into price? So really this is the kind of thing we're looking at. So we've got our chart here, and you've got, let's say, some sort of consolidation, and you've got a little bit of a breakout here, right? And I've kind of touched on this before, but not in this framework. I want to attack this from a slightly different angle now. Okay, so we are tuned in and looking at this kind of thing, and then also let's say we've got something similar, like but completely opposite. You know, we've got, let's say, a fake out and it's starting to come back down here. So two different real different themes, like the two categories that I like to put my trades into: kind of range expansion, reversion. So these may well look on the face of it like trades that you want to get on, right? We'd love to be buying that breakout, thinking we're going to extend, we're going to go long here, we're going to extend at least the length of that, etc, or we're going to sell this fake out here, our stop loss is going to be nicely here, we're going to drive down for a chest to lows. Pretty textbook stuff. Okay, and that would be, okay, admittedly, perhaps these are more textbook chart patterns as opposed to price action. There's a bit of synergy between the two. I mean, my price action stuff is really watching the intricacies of how the candles are formed and the position of them and all that kind of stuff. And chart patterns are very strict in terms of what they see, but there's a definite synergy between the two. So we can still consider this price action. It's really a case of using price on its own, how it's responding, as opposed to using loads of indicators to give us signals. So we're reading this and we're all over this and we're deciding to get on board it. But the thing is, very often, guys, and listen, I've made this mistake before many times, and I know a lot of you guys have as well. We can read too much into this. We can be there, especially day traders. We're there, we've got our kind of screens up, we've got our 15-minute, our hourly, our daily, and then we've got our 1-minute chart, and we're so zoomed in on this. We get our blinkers on, we're looking right in. Maybe it's been a quiet period up till the time you see this, and so the chart, which is a little bit of a nemesis, guys, is that the chart then will auto fill into the screen you've got, so it auto scales. So even the range is only 10-15 pips, all of a sudden it starts to look as if it's a big range. And that's one thing, guys, a quick tip is just to adjust that setting so that you've got it on manual, so you can see, hey, it's only doing this. In the picture of the day's ATR, I'm only doing this. I can put it into some perspective. Another video coming on that at some point in the future, no doubt. But the point is, we now see this and we get all excited because our subconscious spots this and goes, you know, I've made a lot of money from this kind of stuff before. You know, these range breakouts are quite good. I don't know, wait for the pullback above, etc. And we end up piling in. And only after we look at it do we go, oh, you know, it's like a 7-tick range or something. By the time I've in and slipped and stuff, I'm looking at maximum of 8-10 ticks. I'm looking for kind of 30, 40, 50 today. That's my the way I'm trading it. And so we kind of get caught in. So not only that, but also the fact that it's doing nothing. We can read too much into what price is doing. And yes, price is doing something interesting here, but when we put it into the bigger picture, it's completely not interested. This is completely different from something that's come from a kind of whole drive upwards off the open. It's refreshing, it's exploring new territory, it's accepting new price levels, it's broken through resistance. That's worlds apart from something at lunchtime that's just chopping around doing nothing. Similarly with this, if it's at the open, and it's a huge open drive that's failed, it's got a big range at the open, I'll be all over that, especially if I had a reasonable short thesis anyway, because I feel like it's been rejected. There's a lot of institutional kind of money flow in here, and it's just coming off and it's ticking loads of boxes for me. If this was, again, during a quiet period, let's say there was I'll use the lunchtime analogy there, but let's use a different analogy here. Let's say we were kind of we've done some work in the morning to the upside and downside. We're kind of sat in a range and we're kind of oscillating around the VWAP. Let's say the VWAP's here. Coming to the close, it's going to be a bank holiday tomorrow or something. It's a holiday type season, that kind of environment. And this would not excite me in the slightest. Now, there's a slight caveat to that, is that mean reversion generally in a quieter environment is more exciting than a range expansion, because mean reversion generally works better in a quiet environment. So I know some of you may well comment on that and say, well, I'd take mean reversion all day long in a quiet environment because the likelihood is we're going to close that VWAP. And yes, I agree. But for the example purposes, the point is this pattern may not have the same effect as it would do in another position. So going back to the initial question, guys, can you read too much into price? Yes, you can. You've got to be very careful, specifically as a day trader, that you don't have your blinkers on. You're not zoomed in. Watch out for that kind of screen nemesis thing of charts zooming out. And being mindful that, hey, where am I in the bigger picture? That's the one question you've got to ask yourself. It's the one question that really cements and helps you avoid getting into naff trades like this, getting into these trades that don't do you, don't serve you, don't get you anywhere that you need to be. All right, guys, take care. See you next one. Bye-bye.